All right, let's dive right in. Palantir just dropped its third quarter results for 2025, and they are something else. We're going to break down all the numbers, figure out what they mean, and really decode what's going on with one of the most interesting software companies out there.
But before we get into Palantir specifics, I want to ask a question. How do you tell the difference between a software company that's just doing okay versus one that is absolutely elite? Well, it turns out there's a pretty simple rule the industry uses to measure exactly that.
It's called the Rule of 40, and it's pretty straightforward. You take a company's revenue growth rate and you add its profit margin. If that number is over 40%, you're looking at a healthy, high-performing company. But if that score gets over 80%, well, then you're talking about a truly world-class, elite-tier business.
So the big question is, where did Palantir land for this quarter? Well, they didn't just pass 40. They didn't even just pass 80. They absolutely crushed it with a score of 114%. Just seeing that number alone tells you this was a spectacular quarter.
Okay, so 114% sounds impressive, but just how exceptional is it really? To get a feel for that, we need to put it into context. We need to see how Palantir stacks up against some of the other biggest names in the game.
So first, let's look at their direct peers, other massive enterprise software companies. You see names like SAP and Adobe, and look, they're doing great. They are solidly over that 40% line. But then you see Palantir at 114, and it's not even close. They're playing a completely different game right now.
Now, this is where it gets really interesting. What happens when you compare them to the absolute titans of technology? We're talking Apple, Microsoft, NVIDIA. Well, Palantir isn't just holding its own, it's right there in the mix, performing in the same stratosphere as Microsoft and breathing the same rare air as NVIDIA. This isn't just a great quarter for an enterprise company. This is a world-class quarter for any tech company on the planet, period. So what on earth is fueling this kind of result? Where is all of this incredible momentum coming from? Well, the answer is crystal clear. It's the absolute explosion of their commercial business, right here in the United States.
It all comes down to this one jaw-dropping number. Year over year, Palantir's U.S. commercial revenue grew by a staggering 121%. That's more than double in just 12 months.
And this isn't just some accounting trick. It's being driven by a flood of new deals. This quarter, they closed $1.3 billion in total contract value. That's a 342% jump from last year. It shows that new business isn't just trickling in. It's a tidal wave.
And you know, what's maybe even more important is what this means for the future. Their remaining deal value in the US, so that's all the contracts they've signed but haven't delivered on yet, that grew by 199%. That's a massive locked-in pipeline of future revenue. The growth is set to continue.
This chart just visualizes that story perfectly. I mean, just look at that jump. From $179 million in Q3 last year, all the way to $397 million this year. The U.S. commercial engine isn't just running smoothly, it's hitting the afterburners.
You know, numbers on a page are one thing, but what really proves a company's worth is validation from other leaders in the industry. It's about real-world proof. And this quarter, Palantir got some of the most powerful endorsements you could imagine. First and foremost, this groundbreaking partnership with NVIDIA. They're basically plugging Palantir's AI platform directly into NVIDIA's superpowered hardware. What does that mean for businesses? It means they can take their mountains of data and get AI-driven answers and decisions faster than ever thought possible. And you just don't get a stronger stamp of approval than this. Jensen Huang, the CEO of NVIDIA, said Palantir's ontology is probably the single most important enterprise stack in the world. I mean, think about that. Coming from the guy at the absolute center of the entire AI revolution, that statement is monumental.
But it's not just about flashy tech partnerships, it's about delivering real results. Take the automotive company Lear Corporation. They're using Palantir to run their manufacturing, and look at the payoff, over $30 million in savings in just the first 6 months of the year. That is tangible impact.
And here's the feedback right from the customer. Jennifer Johnson at Lear says the platform lets them stop worrying about the tech and focus on their real job, running their plants well and making a great product. And that, right there, is why companies are signing on the dotted line for these huge contracts.
Okay, so we've seen the incredible growth, we've seen the industry validation, so now let's zoom out and check on the foundation. Is the overall business actually healthy while all this is happening? And the answer is a huge yes. This is not growth at all costs. Total revenue surged 63% to $1.18 billion. But look at this. Adjusted operating income hit $601 million. That's a 51% margin. That is an insane level of profitability for a company growing this fast. It's really the best of both worlds.
So, with a quarter like this in the books, the question on everyone's mind is, obviously, can they keep this up? What does the company itself think is coming next?
Well, looking at their own guidance, Palantir seems incredibly confident. They're projecting even higher revenue for next quarter, and they're raising their forecast for the whole year. But honestly, the number that really jumps out to me here is their projection for U.S. commercial revenue. They're expecting it to grow more than 104% for the entire year. Management is telling the world this acceleration is real and we expect it to continue.
So when you put it all together, the record results, the elite performance, the validation from industry titans, and a super confident forecast, it starts to feel like Palantir's future isn't something we have to predict anymore. It feels like a reality that's just being deployed quarter by quarter right in front of us. And the only real question left is just how big is that deployment going to get?